There are moments in the stock market where just one decision can change your financial future forever. Imagine identifying a company trading under $5 and watching it rise tenfold in just a matter of months. That's not just a fantasy, it's happened before, and it can happen again. These aren't random shots in the dark or empty promises. We're talking about penny stocks that are backed by solid fundamentals, cutting-edge technology, and growing interest from Wall Street analysts. These stocks are sitting quietly under the radar, waiting to explode, and if you catch them early, your small investment could turn into something truly life-changing. So today, we are diving into two penny stocks that have the potential to make you rich not next decade, but possibly within the next year. These companies aren't flukes or hype-driven duds. These are real businesses with real revenue and a clear path toward profitability and expansion. They're building in silence, while the rest of the market focuses on overvalued tech giants or crumbling meme stocks. And if you're serious about making money in the stock market, you want to keep your eyes and ears open, watch this video till the very end, and remember to hit that subscribe button and turn on the notifications, because the stock we're covering today might just be your biggest opportunity yet. The first company on our radar is Inuvo Incorporated, a name you may not have heard often, but one that's quietly reshaping the future of advertising through artificial intelligence. Inuvo is an advertising technology company operating out of the United States, and their claim to fame is something most ad tech companies only dream of: a proprietary generative AI platform that can discover and target digital audiences more accurately than anything else on the market. In a world where data is the new currency and attention is gold, companies that can help brands connect with the right audience in real time are going to dominate. And that's exactly where Inuvo is aiming. They've developed a product called the Intent Key Self-Serve Platform, an advanced AI agent designed specifically for audience discovery and targeting. This platform was recently enhanced and relaunched with more robust features, allowing marketers to drill down into zip code level insights, improving targeting efficiency and campaign ROI. It's a marketer's dream, and that's why Inuvo is suddenly finding itself in high demand. In the most recent quarter, Q1 2025, Inuvo reported a record-breaking revenue of $26.7 million. That's a staggering 57% increase from the $17 million they pulled in during the same period last year. This isn't just their best quarter, it's the best revenue performance in the company's entire history. That level of growth is not something you ignore, especially when gross profit also jumped 41%, from $14.9 million to $21.1 million. The company still posted a net loss of $1.26 million, but here's where it gets interesting. Net loss per share improved to just 1 cent, down from 2 cents a year before. And even more notable, adjusted EBITDA loss was just $22,000, a massive improvement from the $1 million EBITDA loss in Q1 2024. These kinds of improvements tell a clear story. Inuvo is moving aggressively toward profitability, and they're doing it while scaling operations and onboarding new clients. And let's talk about those clients. Inuvo added 20 new Intent Key customers in the last quarter alone, including 15 new self-service clients. This is important because self-service users provide high-margin recurring revenue, and that's the kind of revenue that institutional investors love. More clients, more revenue, and a scalable product with sticky usage is a recipe for long-term stock appreciation. Now let's talk about the balance sheet. Inuvo is currently debt-free. That's right, zero debt. They have enough cash to operate for over 3 years without needing to raise capital. In the penny stock world, that's practically unheard of. Most companies in this space are constantly diluting shares or taking on toxic financing, but not Inuvo. They're lean, stable, and focused. Yes, the stock is volatile. What penny stock isn't? And yes, they recently underwent a reverse stock split to boost their share price. But that was a strategic move to increase their attractiveness to larger funds and institutions. The current stock price sits at $4.92, but according to 3 Wall Street analysts, the average 12-month price target is $13.33, with estimates ranging from $10 to $15. That's a potential upside of over 169%. If you invested $1,000 today and that target is hit, you're looking at nearly $2,700 in return. And remember, this is based on solid projections, not hype. Now let's turn our attention to the second stock on the list, Agora Incorporated. This company may not have the flashiest name, but it's a heavyweight in the real-time engagement space. Agora operates a platform as a service that allows developers to integrate real-time voice, video, and messaging into applications. Whether it's for telehealth, remote education, customer support, or virtual events, Agora's tech makes it all possible. The company serves markets in the US, China, and globally. And in a world where remote communication and digital collaboration have become permanent fixtures, the demand for Agora's platform is only growing. They've divided their business into two main segments: Agora, which focuses on international clients, and Shenwang, which handles operations in China. In Q1 2025, Agora reported total revenue of $33.27 million, a modest increase of 0.8% from the previous year. Now, on the surface, that might seem unimpressive, but there's more to the story. Last year's revenue included $3.3 million from end-of-sale products that are no longer part of the business. Remove that, and core revenue actually grew nicely. The Agora segment pulled in $18.6 million in the quarter, up 17.7% year over year. That's double-digit growth in a segment that's becoming more important each quarter. The Shenwang segment did see a revenue drop, falling to 105.5 million renminbi, or $14.7 million, due to phasing out of those older products. But that's a calculated move by management to refocus the business on scalable, high-margin offerings. And the most exciting part? Agora turned a profit. The company posted a net income of $0.407 million for Q1 2025, compared to a loss last year. It's the beginning of a long-term trend where the company is getting leaner, more efficient, and more profitable. Their financial position is rock solid. Agora has more than enough cash to cover both its short-term and long-term liabilities. This means no immediate financing risk, no need for dilution, and plenty of room to invest in growth or R&D. On top of that, the company has been aggressively buying back shares, completing over 41% of its authorized buyback program since 2022. That tells you one thing: management believes this stock is undervalued. And based on analyst coverage, they're not alone. The current stock price is around $3.71, but analysts covering Agora have issued price targets ranging from $7.10 to $10, with an average target of $8.55. That implies a potential upside of roughly 133%. A $1,000 investment could become $2,300 or more if those projections play out. And given the company's track record of financial discipline, it's not out of reach. When you look at both of these companies side by side, what you find is something rare in the penny stock universe: businesses with actual revenue, real clients, and proven technology. Well, that concludes our list of 2 penny stocks with massive upside potential. Remember, investing in penny stocks carries risk, but the reward can be incredible if you do your research and act strategically. Stay smart, stay informed, and keep building that portfolio one smart move at a time. Thanks for watching, and I'll see you in the next one.